In today's video, I'm going to list off for you guys all the dividend stocks that I own. I'm going to let you know how much I'm up or down on each one of them. I'll let you know what my personal dividend yield is for each one of them too. And I'll even give you a few reasons why I own these stocks and whether I plan to buy, hold, or sell at today's prices. Just a quick heads up though, I'm only going to be covering stocks that are currently yielding above 1%. Just because this is a dividend related video, I feel like you guys won't get much use out of it if I'm mentioning stocks that don't even yield at least 1%. So just so you know, stocks like Apple or Microsoft will not be covered in today's video, but everything else that yields at least 1% will be covered, and that's 9 stocks in total. So it's still going to be a ton of fun. We got a lot of stocks to run through. I really hope you guys enjoy this. But with that said, we got a lot to cover, so let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Okay, so the way we're going to do this is I'm going to count down from 9 to 1, and it's going to go in the order of smallest position to largest within my overall portfolio. Speaking of which, I will be making another video soon about my overall portfolio, the entirety of it, so make sure that you're subscribed for that video. It's going to be coming out soon. But with that said, got a lot of stuff to cover here. It's going to be fun, so let's just dive straight into this list. Alright, and kicking things off here with stock number 9, that's going to be Bristol Myers Squibb, ticker symbol BMY, at about 2% of my overall portfolio, and I am currently up on this position by around 33%. As far as why I own it, well, this is a giant biotech pharmaceutical company that has only become even larger after making huge acquisitions worth tens of billions of dollars like the ones in Celgene, Myocardia, and Forbius, just in the last couple years alone. Now the result is that they have multiple blockbuster drugs under their belt, meaning that they generate over $1 billion worth of sales each, and they also have a robust pipeline to go along with it of over 50 drugs in development across more than 40 different types of diseases. As a result, they're able to generate huge profits with operating cash flow more than tripling over the past 5 years, and they've even been able to pay a dividend for over 5 decades in a row, which was grown throughout many of those years. Today the stock is sitting closer to its highs, but even here the dividend yields still about 3%, and on my own personal cost basis, it's quite a bit higher at closer to 4%, which is quite nice. Overall, this is a dividend stock that I definitely plan to hold long term and collect that juicy dividend for as long as possible. But for now, I don't think that I'll be buying any more here just because I already own too many biotechs in my portfolio, which you'll see in just a second. Now moving on to stock number 8 though, that's going to be Verizon, ticker symbol VZ, at also about 2% of my portfolio, which is one of the few stocks that I'm actually down on right now by about 6%. And the reason for owning this one is very simple. Phone and internet usage is not going away anytime soon, with already 97% of all Americans owning a cell phone. So why wouldn't I want to own the company that has by far the highest customer service ratings in quality of service, which has turned them into a cash generating machine of over $40 billion per year, which has in turn allowed them to pay one of the most attractive dividends out there. Because the stock has already crashed by about 30%, largely due to the current market downturn, Verizon's dividend yield has now soared to almost 6%, which is higher than any other point in the past decades. At these levels, I am definitely a buyer of Verizon stock. Okay, at stock number 7, we've got another biotech pharmaceutical giant in Merck, ticker symbol MRK, at also around 2% of my overall portfolio, which I am currently up on this position by over 20%. And like Bristol Myers, I just own Merck for their very large and dominant business that offers me a reliable dividend and its income every year. Last year in particular was a record-breaking year for sales and profits of close to $50 billion and $15 billion respectively, and yet they still have over 100 different products in their pipeline to ensure future growth keeps coming, which is already resulting in double-digit EPS growth expected on average over the next 5 years, which they were also able to accomplish that in the previous 5 years as well, which is, very solid. Overall, this is a very reliable business that has resulted in the stock currently trading near an all-time high. So I probably won't be buying any more shares at this time since I'm also already up by so much on my own position, but even here the dividend is still pretty attractive at over a 3% yield, with my personal yield being a bit higher than that too at 3.7%. So it's definitely a stock I plan to hold. Okay, for stock number 6 though, we've got yet another biotech, this time with the pharmaceutical giant Pfizer, ticker symbol PFE, at a slightly higher about 3% of my portfolio, which I'm currently up over 35% on. And yeah, this one is basically another clone of Bristol Myers and Merck for me. I mean, in Pfizer's case, they're especially benefiting right now from the pepperoni V shot that single-handedly doubled their sales and profits last year, which they are using to build up a pipeline of almost 100 different products thanks to the tens of billions of dollars that they've been able to spend on acquiring new companies like Arena Pharmaceuticals as well as Biohaven for their leadership in migraine drugs. As a result, the stock has climbed up significantly in recent years, but a recent drop in the market has left the stock trading in the bottom half of its 52-week range, with a valuation that is over 60% cheaper than the sector and a dividend yield above 3%, with my yield even higher at above 4%. Plus, it's a dividend that they've been paying for decades, so I feel pretty confident in holding this one long term. Like I said before though, I already own too many biotechs, so I probably won't be buying any more shares at this time. But even here, I still think that Pfizer is a good value if you're in need for a quality dividend payer in the pharmaceutical space. On to stock number 5 though. That's actually going to be the only bank stock that I've ever owned myself, and that is JP Morgan Chase, ticker symbol JPM, at also about 3% of my portfolio, which I am currently up over 30% on. And the reason why I own this one is very simple. I don't particularly like investing in bank stocks, so I figure that if I do, I might as well go with the largest, best run bank out there. And in my opinion, that's Chase, with over $100 billion in sales and almost $30 billion in profits just last year alone, that is still expected to put up small growth in each of the next 2 years despite the horrible macroeconomy that we're in right now. And with market share leadership in both deposits and assets, I mean, this is a really strong company here. And as a result, Chase has been able to pay some really sweet dividends over the years that are still yielding about 3.5% with a super low payout ratio and a very high growth rate. And even my personal yield is even higher at 4.5%. The stock tends to perform well over the long term, but a recent pullback due to the macroeconomy has left it down over 30% from its highs. But on the bright side of that, that means that the valuation is actually cheaper than the rest of the sector right now, despite this being the largest bank in America, and in my opinion, the best run bank as well. So I think that it's still a buy here, but I'm just going to be holding on to my shares because I've never really been a huge fan of financial stocks, especially during such strange times like the current macroeconomy that we're in right now. Okay, moving on to stock number 4. That's going to be the giant dividend king in 3M, ticker symbol MMM, at also about 3% of my portfolio, which I'm currently up close to 15% on. And of course, you guys know 3M for being the company behind very popular brands like Post-it Notes and Scotch Tape, but they're also a big player in industrial and healthcare related products too, like even face masks, for example, which have been a hot topic of debate, but they've still been heavily used over the past couple of years, and that's been helping them a bit as well with their financials. In any case, 3M stock itself has been beaten down for years and is currently down over 40% from its highs. And that was in large part due to lawsuits and a lack of innovation, along with heavy ties to the macroeconomy, which has obviously been pretty bad in recent time. But for the things that 3M can control, I think that they've been putting a lot of effort into that. Like, for example, investing billions of dollars on research and development with thousands of new patents in recent years. So at least they're working on innovation. And even with all of their faults, 3M is still a cash cow with record-breaking cash flow almost every year. Plus, the stock crash has raised their dividend above 4% after more than 6 decades of consecutively growing it, and my yield is even higher at 4.6%. I still like 3M a lot at today's prices, but I'm happy with what I already own, so it's mostly a hold for me at this time. All right, we are now breaking into the top three, and coming in at number three, that's going to be PepsiCo, ticker symbol PEP, at just about 4% of my portfolio, which I'm currently up over 50% on. And the reason I own it is simply because of their dominance in the snack, food, and beverage market, with iconic brands like Pepsi, Gatorade, Mountain Dew, Aquafina, as well as all the Frito-Lay's chips like Doritos, Fritos, Cheetos, Lay's, and more. Plus, they even own some higher growth new brands like SodaStream and Bubbly to top it all off. Stock wise, it's always been a solid performer that rarely ever dips thanks to the giant financials that has allowed them to grow their dividend for nearly 5 decades in a row, which is insanely impressive. And yet the yield is still pretty good at over 2.6%. I haven't purchased any more shares in some time though, just because I'm already up a lot on my position and my yield is much higher at over 4%. But I still love holding them long term for that stable dividend income. All right, guys, we're now breaking into the final two stocks, and coming in here at stock number two. For this one, we've actually got the only ETF that I own in my entire portfolio, and that is the Vanguard High Dividend Yield ETF, ticker symbol VYM, at also about 4% of my portfolio, which I'm currently up over 30% on. And I don't normally invest in ETFs, to be honest, just because I like to handpick all of my stocks individually, and I think it's a lot of fun to do it that way. But in the case of VYM, I mean, they're spread across over 400 different companies. There's no way I could own all of those. And many of those stocks are actually in my own portfolio as well, including, by the way, every single stock on today's list. So it's a lot of stocks that I actually like to begin with. And they also have a good PE ratio of only around 15. The average market cap for the holdings is very large at over 160 billion, which I feel gives them more stability. And the fee for owning it is super tiny at just 0.06%. And meanwhile, the dividend is really nice at over a 3% yield, with my own personal yield even higher at almost 4%. Unfortunately, the stock price is currently near an all-time high, so I probably won't be buying any more shares at this time unless the current recession causes the overall market to crash more, and maybe it provides some good buying opportunities on some dips. But for now, I'm still super happy to hold on to this one long term, and that's what I plan to do with VYM. All right, guys, finally, that leaves us now with the last stock on the list. And coming in at number one, that's going to be yet another biotech in AbbVie, ticker symbol ABBV, at about 4% of my portfolio, which I'm currently up well over 100% on my position. So I've more than doubled on my position. Now, let's be honest here, I was very lucky to purchase this one very heavy during the 2019 crash that my old school viewers will remember how almost every video I was making at the time was mentioning AbbVie. I was getting comments, stop talking about AbbVie, you talk about it too much. But I was just buying so heavily at that time. And that crash was mostly caused by the fear of their best-selling drug Humira losing patent protection, which they were trying to make up for by an acquisition of Allergan, which the market hated at the time. But as you'll recall from my old videos, I loved the move and I felt that the stock crash was a huge buying opportunity. And thankfully, I was eventually proven right about that, as both their sales and profits have really been soaring ever since. Now, I do feel though that the stock is no longer a buy just because it's pretty high at this point, and their growth is also expected to slow down next year with actually a 6% drop. But overall, I'm still going to be holding on to my shares long term, because on my own personal yield, I have a yield here for AbbVie of over 8%, which is extremely hard to beat in the market. And even at today's prices, it would still yield you over 4% if you bought at today's prices. And it's got some excellent growth metrics on it too. So I could see maybe some other people, investors wanting to pick this one up, especially during a dip. If it gets a little more volatile here over the next 2 years, I could definitely see that happening with a slowdown in growth, with the current macroeconomy, with the market being volatile. Hey, you catch this one on a dip, and I think AbbVie is still a very good long-term hold. Anyway, that's going to do it for today's video. What do you guys think? Do you like any of these stocks? Do you think that I've made some smart moves here investing in these dividend stocks? Or do you think that I'm calling some of these wrong and maybe I should be exiting these positions? I'd love to hear your thoughts. Do you own any of these? I'd love to hear down below in the comment section. Try to respond to as many comments as I can. But I hope you're all doing well. Let me know what dividend stocks you own. Maybe I'll cover them in future videos. And I'll catch you in the next one. Hope you're all doing well. Take care. Bye-bye.